Right, guys, let's get into it. So if you guys don't know what I'm going to be doing, I'm going to be breaking down these next $6 index pairs one last time to give us indications of potential trade setups that are going to come about for the next 24 to 72 hours. Please factor in that we do have Draghi coming out tomorrow, as well as CAD rates. And so markets are going to be quite volatile, quite choppy. And so be careful, trade smart, don't trade during news, and let's get right into it. So Euro, as of right now, the environment that we in is range bound due to the initial impulse that was made, stating all of this is liquidation or a state of relief. I do want to take your attention real quick to the two potential scenarios that can come about on euro to US dollar, like we were stating in the webinar. We do have this head and shoulders pattern potentially forming, in which if this does start to rally to the upside, it could rally to where that previous left shoulder did form, creating that right shoulder. From there, that 115 handle will be the neckline of this head and shoulders, stating all this bullish momentum would be treated as profit taking or state of relief for potential continuations back down to that neckline, or potentially all the way lower to break the neckline, completing that inverted head and shoulders pattern. Now, if that doesn't come about, structure could simply continue to rally all the way back to where the initial breakout did occur, where the first lower low was made, stating that all of this is still relief or stated as liquidation for further continuation to the downside, tagging the lows again, making this a structural retest. But looking at it from a 4-hour perspective and where structure could go for the next 24 to 72 hours, please factor in Draghi is speaking tomorrow. And so this pair is most likely going to consolidate leading up into the data. However, once the data is finished, you will most likely have a clear direction. If you guys are not familiar with trading complex structures, such as trading range-bound environments after such a long selling period, and on top of that, trading initial impulses and correction of reliefs with it, simple plays are above or below the previous ranges, only because you do have short-term trades within here, and we're going to be going over that real quick. So if you do take your attention to euro right now, you can see there's two possible scenarios. First was the initial impulse made by Draghi a couple weeks ago, stating all of this was relief or a state of continuation, in which if this short-term ascending trend does break, followed by this previous higher low, you could expect a short-term pullback, and then from there you could expect a rally to the ascending trend. Now, if we do break the ascending trend on the daily, plus below the daily support, stating that this was invalid, could look for a short-term continuation pattern and expect this to rally down to the lows of the consolidation box. Remember, we are range bound, so that's all we are stating. Failure to do that, guys, we could see potential bullish plays. If this does start to rally, we could expect a push back to the tops and potentially back to the tops of the range. Now, one thing to factor is that this is a deeper impulse within the entire state of relief, and so we could expect another drop down to the ascending trend, very possible, stating another state of liquidation or relief for potential rally back to the upside. Or if we break below once again where that initial bull run started, we would state that is invalid. USD CAD on the daily time frame, just like euro, has a lot of high volatile data coming out tomorrow, and so be careful. More importantly, we were stating that CAD is still, in our opinion, treated as a corrective structure, and more importantly, this is the state of profit taking that we are in after that initial impulse occurred. And notice this, one thing we were factoring in the webinar as well, is when this impulse occurred and we made this long state of relief or a liquidation, notice where it stopped out at. It stopped out at right exactly where the initial sell occurred, which is where the first lower low had happened, stating that this was a structural retest. Why is that so important? I'm going to be using a different color for this one. Notice what happened here. When we made this huge drop down here, notice where structure is stopping, exactly where the initial sell occurred. And so this could be stated as another structural retest for potential rally down to the ascending trend and potentially breaking the lows just like this previous movement did. Now, right now, everything is critical from a bullish and bearish perspective, and simply wait for the data to prove to you which way we're going to move before you guys decide to take any trades within this pair. And so looking at it from a 4-hour perspective, two ways that I see it with the data: either A, we're going to break above, short-term continuation, and then from there we could rally back to the potential weekly resistance, but be careful, this could be critical. Why I'm stating this: when we rally here, we could rally only to the daily, creating a structural retest, stating all of this as liquidation or relief for potential rally back down to the ascending trend. Now, the only way that you can invalidate this initial bull run here is if once this does flag out, we have to break back above, stating this was invalid. And more importantly, to state the bull run is going to occur, we have to break back above the previous highs, creating higher highs, stating this weekly resistance is now invalid. Short-term continuation pattern, we could expect to rally back up. Failure to do that, my friends, you want to see a strong break, not only below the ascending trend, but below the monthly support, short-term continuation pattern, and then from there you could expect a rally back down to the weekly support. Failure to do either, my friends, will warrant consolidation. That should not be something you are interested in. You do have short-term trades here and within here, but nothing's really long-term until you break above here or below here on USD CAD. USDJPY on the daily time frame, I'm going to go into the 4-hour with you guys, but once again, as my students know from the course, when two channels intersect at the same point, we are waiting for a daily close in one direction or the other. The two channels I'm speaking of are the ones that I just drew. And so looking at it, we do have a short-term state of liquidation. We are in an environment of short-term liquidation or relief after that initial impulse was made, stating all of this movement was short-term, moderate to higher risk. Now that we are at this critical point, we could see a couple possible scenarios. We're either going to break above, making a strong impulse, breaking back above the weekly, stating this was invalid. From there, you're going to expect short-term continuation, and then you could expect a rally back to the weekly resistance and potentially to the monthly. Now, if that doesn't happen, my friends, what we will expect structure to do is we'll expect structure to make a short-term drop, relief, and then from there you could expect the first rally, and we will go down into the smaller time frames for this. Another short-term play down here. The more free-flowing trade is below where that initial bull run had started. But let's pop to the 4-hour time frame to see how we could look for potential trade scenarios. And so looking at UJ, key critical areas. Like we said, if we're going to break above, we have to see a very strong push up, short-term continuation, and then from there rally back up. For the sell, you want to see a break below these lows and back below the daily support, monthly support, short-term continuation, and then from there you could expect a rally down. You have a short-term trade here, not worth it. This is a better trade, but still short-term. The real sell is below this, short-term continuation, and then you can get down here. That's a more free-flowing trade. Besides that, guys, to completely invalidate this, we must break back below relief or continue profit taking for another rally back down. To break or to invalidate a previous breakout, you must break above or below where it previously broke out. And so breaking back inside. And so going to pound dollar on the daily, we discussed this many times in the webinar previously. There are two potential formations to go about, and more importantly, we're going to go over why this was a false break. To start off, just like the Euro chart, we do see a potential head and shoulders pattern that could be formulated if this starts to pull back, stating all the buys will be warranted short-term, moderate to higher risk. We can understand why structure is pulling off near this region. A lot of pending orders sitting here after we broke out, so therefore buyers do take over. And this, if we do start to break out, would target that neckline. Now, failure to do that, and this still does continue to rise, we could potentially create a structural retest for potential continuation back to the downside. The only way we can invalidate this initial bear run is we have to break above. Short-term continuation can rally back to the tops and potentially that weekly descending trend line. Now, looking at pound dollar real quick, just want to go over why structure got stopped out and why a lot of people ended up getting beat up on the current trade. Whether you guys waited for this trend to break out or you guys waited for that trend to break out to warrant whether you're going to take a buy or not, a lot of people got stopped down on this trade simply for the fact that they didn't wait for two simple things. A, daily trend break, and more importantly, we know a trend's not a straight line shot, but rather a consistency of highs and lows. We never broke the last lower high of the descending trend line. Therefore, momentum never shifted, and rather we can see why market makers were able to grab as many orders as they did and start to cause structure to pull off. Simply wait for a daily candle in one direction or the other when two channels intersect at the same point. And so that is the main reason why people got stopped out. It had nothing to do with the data or things like that. The data is just another tool that market makers can use to grab a tremendous amount of orders. And so this is a basis of price action. Had nothing to do on that. And when you switch direction, right, daily is your direction. If you're going to switch, you need a daily breakout continuation on the smaller time frames. And so that is the main reason why a lot of people ended up getting stopped out within that movement. And on top of that, we did create a gap, my friends, and you guys should not be trading the gaps. And so looking at pound dollar, how are we going to go about the structure now? What can we do to change it? What I'm going to do first is I'm going to move back to where we were on that previous false break just to identify that as the lower high that I want to crack. looking at it, we can see that we are at a very critical area in which what we do want to see first is a break above the descending trend line and back above the weekly resistance, stating this initial push was invalid. And then from there, we're going to look for a short-term continuation, and you could potentially rally it to the daily or monthly resistance. Now, the only way the sell comes about, my friends, is if and only if we do break below the previous lows. From there, a short-term continuation, and then you could expect a rally back down to the lows. The real low is a breakable low. The real sell is a breakable low, short-term continuation, and run it down. The real bullish run is first a break all the way above here to state that this is all over. But like we stated before, that's going to take some time. AUDUSD on the daily time frame, we are at a very critical area to begin. A lot of pending orders are sitting within the current region that we are in, and so you want to be careful. We have seen false breaks within this previous region. We could see the same as of right now on AU, but looking at it more importantly, after we made this initial impulse, this was a very long state of reversal, not continuation. We did get a short-term relief, but structure hasn't really made a serious liquidated movement yet, and so looking at it, we are creating short-term higher highs here, so we could expect a rally back to the descending trend. Remember, this would be treated as relief or state of liquidation for potential continuation back to the downside unless we broke back above previous highs to state that this was now over, short-term continuation, and then rally that back to the upside. But if we take a look at the 4-hour time frame on AU, there's a couple of ways that we can go about it. And so looking at it, we do have this initial impulse here. This is all treated as relief or profit taking. If we break out short-term pullback, you could expect a rally back to the daily descending trend line. Once again, this is treated as short-term simply for the fact that we are descending. You do want to see a break above previous monthly resistance, from there short-term continuation, and then you could expect a rally back to the daily resistance. Now, if that doesn't occur and this still continues to drop, notice how the bull run occurred. The bull run occurred by breaking this previous region. We want to break back below it to state that this was invalid, in which you want to see a strong impulse, breaking that last higher low, short-term continuation, and then you could run it to the floor. So you guys would state, can I take trades in here? There are viable trades to take in here, as in you could take the break of that, short-term pullback, and run it back down. But once again, this could be all treated as relief after that initial impulse for potential continuation back up, creating a structural retest as well. So be careful on that end. That would just be warranted as a higher risk. Last but not least, NZDUSD to start. Well, I said to start, to end. We are at a very critical area at NU only because we are not breaking this certain region right here, sitting at like 67.58 up to around 68.60, about 100 pips. You can see false breaks occur, and so potentially another one occurring as of right now. Looking at it in a more closer perspective, we can see that NU's behavior starts with a very strong impulse, followed by a nice state of liquidation or relief, followed by another strong impulse, in which that is the current environment that we are in, a state of liquidation or relief, in which we could potentially be creating a structural retest. However, one thing to factor in is this impulse and this impulse. This is much shorter, and that initial impulse telling us that the bear market is potentially dying off. Pulling it to the 4-hour time frame, like I stated before, guys, we are looking for the same type of movement here if it does in fact break the lows. And so looking at it for as of right now, this is definitely a difference compared to the last movement, only because this is a bit more impulsive. And so there's two possible ways. This could be treated as relief after the initial impulse for a potential break back to the upside. Once again, this would be short term. The real buy is breaking back above this previous high, short-term continuation, and then you could expect to rally that back up. All short-term, guys. Now, even if we got to this point here and pulled back, this would all still be treated as relief for potential continuations back to the downsides, coinciding with the daily's overall momentum. Now, the only way that we could see a sell is, and there's one more buy actually, we could pull back all the way to this previous area where structure did in fact start the bullish run. From there, this could all be treated as relief or a state of liquidation for one more rally back up. The only way that we can invalidate this initial run is we have to break back below it, also below the monthly support, followed by continuation below the monthly, and then you could target the lows and potentially even lower. And so with that, my friends, these are the pairs that I want to review in reference to this week's market. And so with that, be very careful, guys. Trade safely. We have a lot of data coming out tomorrow. And so the good thing, though, is that if you guys are an opportunist like me, you guys are not a gambler, you simply wait for the data to create your opportunity, and you guys will execute. You guys will execute once that opportunity is given. Don't be that gambler, be the opportunist, all right? trade safe, guys. And thank you so much for taking the time out to watch me break down these charts. And now we're going to get into the questions.